And hello everybody, welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and FTM analysis video. I first want to start off by wishing each and every one of you a very, very happy Valentine's Day. I hope you guys spend today with your significant others and making them feel special, although we all should be doing that on a daily basis. But what I have asked for today is a whole lot of freaking cake. Yeah, cake makes me very, very happy, and I need a reason to ask for cake. So that's what I have asked for this Valentine's Day. Now, unfortunately, we've decided to, skip the date because there is going to be a very important announcement today, and that is going to be the CPI announcement. Okay, and when it takes place, unfortunately for us, is going to be supper time. So the CPI announcement comes out today, and I do believe this announcement is likely going to add to market volatility, and not just on Bitcoin, but across markets. Okay, and I'll tell you, I'll be going over that today, as well as the numbers and what the market is sort of expecting and what was technically been priced in here. Okay. And then I'm basically going to use that information, and depending on what we get here, depending on the outcome, we can then look for Bitcoin's critical levels of support and resistance overhead. Okay, because I believe that the outcome of this is going to drive price either up or down. So we'll be discussing key regions of support and targets. And then I'll be ending off with the altcoin of the day, which is going to be FTM. Now, without further ado, I don't want to waste too much time on the agenda. Let's jump in because there is interesting data. Now, if I take you guys on over to the schedule of release for the Consumer Price Index, you'll see that January numbers are coming out today on Feb 14, 2023 at 8:30 a.m. Okay, now why is this important? Why is CPI even important, and why is it important enough to, move markets? It's because CPI, guys, is a direct reflection of inflation. Okay, it is a direct reflection of inflation. And what we need to know is that the Fed's mandate is to, get inflation down back down to 2%. Okay, 2% is that target rate that they are sticking to. What is the rate sitting at right now? It's sitting at a whole freaking 6.5. How have they been acting to get this under control? Well, they've been increasing interest rates on a monthly basis, right? We already know that. So now, since summer of last year, this is the chart that reflects the rate of change of interest rates, right? They were increasing it by 75 basis points on a month-to-month basis. That was a very, very steep slope up. In fact, that was one of the most rapid rate changes we've seen since the 70s. Yeah, since before I was even born. Okay, so 75 basis points, 75, 75. It's only recently, now that inflation numbers have been improving, that they have brought those rates down to 25 basis points. Okay, so that slope has sort of changed a bit. So the rate of growth of interest rates have changed. And that's why we saw markets sort of rally across the board, right? Now, of course, Bitcoin had a black swan event, being the FTX event. But if you look at SPY, if you look at other indices, they all rallied. They've all sort of recovered based on what was going on here. Now, I do believe that today's announcement is going to be important. Why? Because the Fed has been increasing these rates based on two very important variables that they're looking at. They're looking at one, the CPI number, but the other number that they're looking at is the employment numbers. Because their theory is this. They're like, hey guys, because the job market was so tight, wages across the board went up. Okay, people's wages went up, and those very, very high wages were chasing these goods and driving the price of these goods up, adding to inflation. Okay, that was their theory. So now what they were looking for on the employment report was for, essentially, in a very, very crude terms, is for people to lose jobs. Okay, I'm surprised people are not making a big noise about this, but that's essentially what they were looking for. They wanted to see people lose jobs. They were looking for the unemployment number to go up, which means people losing jobs, which would then bring these high wages under control, which would then lead to goods going down, which would then lead to inflation going down. And they thought that that was the recipe that could get them to that 2% rate of inflation. Right. However, what happened with the unemployment report that came out very recently is that these numbers came in lower. Okay, basically telling us that more people found jobs. So now what Jay Powell said in his most recent meeting was that, hey guys, and this is something that he was very explicit about. Like, you need to understand that he was vague about a lot of things and he left it open to interpretation. However, the one thing that he did not leave open to interpretation was this. He said that, listen guys, yes, employment numbers have come in strong. Okay. He was looking at that. He's like, employment numbers, great. People are getting jobs. They've come in strong. Okay. But now I'll tell you this. If CPI, which is inflation, comes in hot, which means if inflation comes in higher than 6.5, he's going to be stepping on the gas in terms of the rate hikes. Okay, so we know that, okay, we got a 25 basis point rate hike. But now, if this number today comes in higher than 6.5%, he can take it up. The market is going to expect him to take it up once again to 50 basis points or higher. But now question is how much? Now the thing about markets is that they're forward pricing, right? What has been priced in here? Now we have been dumping since Feb 1st, since the last time he spoke, we have been actually dumping to the downside, right? Ever since he spoke. So now we have a 25 basis point rate hike, we have a 50 basis point rate hike, and a 75 basis point rate hike. What has the market priced in right here? Well, for that, let's go ahead and look at the CME Fed Watch tool. All right, so here we are. So around 86.3% of market participants thinks that he's only going to increase it by 25 basis points, and 13.7% think he's going to increase it by 50 basis points. So it's always majority wins, right? So what's being priced in on the chart is a 25 basis point rate hike. Okay, but now here's the thing. If I take you guys back on over to the chart, I've cleared it out for you. This has been the historical data for inflation, right? It's been going down month over month, 8.2 to 7.7 to 7.1 to 6.5, and now we're waiting on this. Okay, now this is going to be relative to the previous month at 6.5. So now 6.5 is that rate. What people have essentially priced in here is saying that, okay, you know what? He's pretty much just going to keep up with 25 basis points. That's telling me that they're a bit more dovish. Okay, the market is actually expecting inflation to come in either lower or equal to what they forecasted at 6.2%. Okay, so now if inflation, basically CPI, if CPI today comes in lower than or equal to 6.5, I'm saying markets rally. Okay, we actually see a turn here. We could see the next rally because the 25 basis points has already been priced in. However, if, for whatever reason, CPI comes in hot, inflation comes in hot, and the number that is released today is greater than 6.5, that is going to lead to a dump in the market. Okay, so now 6.5 is a number we need to watch out for today. Okay, where does the CPI number fall relative to 6.5? Either higher or lower, because that is then going to give us a gauge on what is to come in terms of price action. Alrighty, so far the market has only priced in this possibility right here, okay, less than or equal to 6.5. If we get it higher than or equal to, the market has not priced that in just yet. Okay, as you can see here, CME Fed Watch Tool, only 13.7% of people think that a 55 basis point rate hike is due next month. So this has not been priced in, and it will get priced in based on this number. Because like I said, if there was anything he was very, very explicit about, it's having the combination of high employment numbers plus high inflation. This is not a combination he wants to see. And if he sees this combination today, he is likely going to step on the gas when it comes to interest rate hikes next month. Okay, so now based on what comes out today, let's go ahead and talk about the Bitcoin's critical levels. Okay, here we are, a nice clean chart on Bitcoin. I'm currently on the monthly time frame, and I do believe that this is a very important time frame because we are sitting on critical monthly support. Now, as far as the technical analysis is concerned, nothing much has really changed from my last video. I do believe that we're still holding support. We have not broken it just yet. And today what I want to do is drive in the significance of that support once again. The support that we're looking at over here, guys, is the monthly 10 simple moving average. Okay, I'm going to go ahead and bring that up on my chart with the regions of support. Actually, I'm going to knock this off. Okay, yeah. So what we're looking at over here is the monthly 10 simple moving average. Okay, what we observed last month was that the month of Jan actually closed over the monthly 10. And what we're doing is we're currently coming down for a retest on that region. We have not lost it just yet. Alrighty, monthly 10 SMA, guys, if you guys want to take note of it. Now, of course, this is a moving average, so it moves with the ebb and flow of price action, but for now, it's coming in at around $21,358. Okay, what I've gone ahead and done is I actually marked this out with a range, a line segment, because I did propose a play, because I told you guys in the last video that, hey, you know what, this is not just the monthly 10 SMA. What we also have, if I take you guys on over to the daily time frame and put on my Mango dynamic indicator, right? We were holding monthly support. In addition to that, we were holding the daily dynamic. Okay, and so far, guys, every candle has closed into the daily dynamic, even yesterday's candle as well. Okay, this was a doji, so it just looks like a line on my chart. There was so much indecision, but just based on how the doji ended, I'm saying that the bulls actually took over there. They won that fight. And this was one of the cases that I presented to you. When we come down, we graze the monthly 10 SMA only for us to close into the mango dynamic on the daily time frame. And that's essentially what we have been doing. Okay, now as far as this range is concerned, I'm in a position where I have to amend the range, because before I was looking at the bottom of the dynamic, but as you can see, the cloud is narrowing there. So we can actually bring it right here. Okay, I'm going to just extend this box right here. So now this range of oscillation has increased, okay, now we have dynamic resistance coming in at around 21.8K. Okay, so what I want to see tomorrow is price actually close into the mango dynamic. So over 21.8K for me to get for me to understand that, okay, you know what, the bulls are showing their hand here. They have strength to take this up even further. What's going to be very important about that picture, even if we start closing into the daily dynamic, is we'd be not only closing into the dynamic, but also taking out the range high over here, because every candle so far since, the 9th of Feb has been closing well under that level, right? At around 21.8K. So yeah, that is dynamic resistance, but that is also a region of resistance overhead just in terms of price action. Right, 21.8K, that is going to be a strong picture. If we actually start living over 21.8K before the CPI numbers come out, I'll say that there's some insider information showing on the chart, and we could very well expect rates at CPI to come in less than or equal to 6.5%. Okay, that would be the bulls really showing their hand there. That will be the insiders showing their hand there. Yeah, look for that. But currently, what's important to note about this entire picture is that I would not jump the gun to the short side. Not for as long as we're holding the 10 SMA right here, okay, at around 21.3K. That is a critical level. So, this is why I implore you guys to go and watch the previous video that I did, because I did do some preliminary backtesting on it. All right, just to drive in the significance of that zone. But now, question is there anything alluding to, price actually rallying from here, getting into the CPI data? Well, for that, let's get on over to the dashboard. Let's see what the dashboard trends are telling us. Is it giving us any calls that we can look at? So now on the 4-hour time frame, we have a short signal. Came in 19 hours ago. Returns, however, you're down a good negative 0.71%, negligible. But what this is telling me is that there's no follow through on the short side. There is no follow through on the bearish side for now. Okay, volatility also dwindling down at 34. Okay, telling us, yes, we're in a consolidation. Price is hesitating here. However, if the bears want to pick this up further, they can. Okay, volatility, once again, 34. How about the 12-hour time frame? Okay, what do you know? 12-hour, guys, is still neutral. Okay, this came in 4.3 days ago. Volatility at 74, but notice the flags here. We have potential bullish divergence on the mango dashboard. Okay, potential bullish divergence on the 12-hour time frame. So with this picture, let's get on over to the 12-hour to see what we can sort of extrapolate from here. Right, I'm on the 12-hour time frame, and so far, and like I said, you're seeing that consolidation. The 4 hours even telling you you're seeing consolidation. This so far, guys, looks like a W-like formation. However, the thing about formations, the thing about patterns, is that what activates a pattern, whether bullish or bearish, is the break of the pattern. Okay, so far we have not received that break. Right, so we can just forecast to a certain level of probability here. So now if this W-like formation actually plays out, can go ahead, look at where the measured move comes in at. Okay, this will likely take Bitcoin all the way up to 22.3K if it plays out. But you know what? Forget about the measured move. Let's go ahead and dissect that very cool oscillator call. We have bullish divergence on the oscillators. So let's go ahead and find that. I'm going to get rid of the Stokes for now. Okay, just look at the RSI because that's where the bullish divergence is actually playing off of right now. So now the bullish divergence is this. We have lower lows on price action. Okay. And we have, on the same juncture, we have higher lows on the oscillator. Okay, that's it right there. Now, at what point does this trigger? Well, keep it simple, stupid. If the next 12-hour candle closes above the wick high of the previous 12-hour candle, which comes in at around 21,856, also lining up with what, guys? Also lining up with the daily dynamic, also lining up with the neckline of the W-like formation. Right, so this is a very, very critical region. If we take that out to the upside, okay, and it's inclusive of, and we basically live over the wick low of this candle right here, which comes in at 21,376. Okay, so basically live over that point as well as maintain the wick, the previous wick low as the lowest point. That is going to trigger the bullish divergence to the upside. Right, what I'm really, really liking about this picture is the amount of confluence that this has on the 21.8K region. Okay, taking that out is going to trigger multiple bullish triggers for Bitcoin. We'll be activating the W-like formation to the upside on the 12-hour time frame. In addition to that, we'll be living over the daily dynamic indicator. In addition to that, we will also be taking out a level of resistance as far as price action is concerned. So there's going to be a lot of bullish triggers that goes off with just us taking out 21.8K to the upside. Okay, so watch out for this play. Okay, if we start getting that before the CPI numbers come in, I'm saying that is going to be a precursor to what to expect even in terms of CPI. I'll be looking at CPI coming in cool at that point. Alrighty, so now if we get that rally, where will I expect Bitcoin to get back up to? Well, for that daily time frame, let's put on the dynamic. I'm looking at this region right here, top of the dynamic, coming in at around 22.5K at the very least. Okay, that is going to be an overarching bullish picture because notice what we'd be doing at that point. We'd be bouncing off the daily dynamic. We'd be bouncing off the 2-day dynamic. We'd be bouncing off the 3-day dynamic as well. We had a bit of a front run on the 3-day dynamic, but this is going to be strong price action if we do see that bounce. Okay, so that's what I will be expecting from price action, at which point I'll be assessing price action after that for the days to come to anticipate the next continuation leg for Bitcoin. Okay, now as far as, further downside for Bitcoin is concerned, once again, keep it simple. If we get CPI numbers greater than 6.5, guys, that's when I'll be expecting the dump to the downside. Now, I'm keeping my levels the same. Okay, I'm looking at my deeper pullback levels that I'd brought to your attention previously. And these are the deeper pullback levels. Okay, it's an entire zone. I've marked out the zone for you, which comes in at around 20.8K, going all the way down to 20.2K. And they're critical levels, guys, okay? And these are also levels onto which my bull run triggers are hinged on. I'm looking at 4 bull run triggers, out of which 3 have gone off, and 2 out of the 3 that have gone off are particularly hinged on this range. Breaking this range is going to basically make me reevaluate my stance on the bull run. Okay, so this is going to be a critical pullback level. So now the pullback level I'm looking at, like I said, mentioned again, 20.8K going all the way down to 20.2K. Where am I getting these levels from? Well, I'm looking at the weekly dynamic. Notice the 4-day dynamic is also lining up right there. 3-day dynamic, I believe, is also lining up right there. 2-day dynamic slightly over us right there. Brilliant. And also in addition to that, if I put on my mango ribbon indicator, take you on over to the 4-day time frame, you'll see that that's the 4-day 21 exponential moving average as well. How about the 3-day? Anything lining up on the 3-day? That's 3-day 21 as well as 3-day 55 exponential moving average. How about the 2-day? That is the 2-day 55 exponential moving average. How about the weekly? Anything on the weekly? And yes, that is the weekly 21 as well as the weekly 10 simple moving average. So there's a lot lining up with that region right there. Okay, so and that's why I'll be looking at that as the next deeper pullback zone. The markets have already pulled back significantly. We're already down a good 11%. So even if we do get numbers greater than 6.5, I'm saying, yeah, we're due for another pullback. This is the zone that I'm looking at, but I'm not sure if we drop any further because ultimately, guys, when it comes to markets, when it comes to really assessing the next run up, you're looking at the overarching liquidity in the market. And if you look back at that previous sort of COVID zone where we got like unprecedented amounts of liquidity that entered right here due to some very aggressive monetary policy, the liquidity that entered right here has not been taken out of the market completely, not even close. The thing about interest rates, yeah, people look at interest rates to determine liquidity. However, it's not just interest rates that drive liquidity. There are other variables that we ought to look at that also drive liquidity. And the thing is that when you assess the variables and the picture as a whole, I don't think that liquidity is exited at all. Maybe it's on the sidelines, but not exited, not taken out completely. Okay, even after QT, even after quantitative tightening. So yeah, while fundamentals have its place, the thing about fundamentals, guys, there's just too much in the wiring of it. Okay, so really being able to assess every edge case of the fundamental landscape can be an impossibility with the way it changes, with the rate at which it changes. So if I really had to drive in, where should you be focusing on? Should you be focusing on price action or should you be focusing on interest rates? I'm saying focus on price action. Price action, it's forward guiding. Okay, price action will basically paint the picture for you before the picture even enters the fundamental landscape. All right, so if there's anything you should be giving importance to, it is going to be price action. So now remember, key pullback levels for anything higher than 6.5 is going to be 20.2K going all the way up to 20.8K. If we get in cool inflation numbers, then you can expect a rally. I will be expecting continuation from Bitcoin from there. Alrighty, so now with this, we can jump on over to the altcoin of the day, which is FTM. Alright, so here we are, FTM USD on the daily time frame. Now, I was asked a very interesting question a couple of days ago via PM. Some person asked me, he's like, Krisha, are you trading any of the low and mid M caps? Because it appears you're only covering the mainstayers on your daily videos. Would you just recommend staying away from the low and mid M caps? And I'll be honest with you, I have been building an altcoin portfolio. Okay, and from that portfolio actually consists of low and mid M caps. And in fact, 2 of the low M caps that I did catch has really set up my portfolio very, very well. Like I've managed to bag a good 200 to 300% on each of them. Okay, so I'm looking pretty on that end. However, you guys need to understand that it gets very difficult for me to bring up the low and mid M caps, especially during this market juncture, right? Because if this is the cycle. We're in this phase of the cycle right now. We're in that turn. And the thing about the turn, guys, is that the chop can get very heavy if you are not careful. And not just on Bitcoin, but I'm talking about the altcoins as well. Now, with the low and mid M caps, the volatility is super high. Okay, and if you do not have a risk management system in place or even invalidations, you're going to get chopped up very badly. Okay, and that's why I have to be very responsible before I bring up any of those charts to your attention. Now, for those of you in the Mango Seed program, I'm a lot more inclined to bring those charts up to your attention because you guys have a risk management system that's been given to you. And I implore you guys to use it well. Now, I will be presenting the charts that I'm looking at on the seed, on the private seed server. But for now, until we get into this next run-up phase, okay, now this is for everyone else. Until we get into this run-up phase where the market actually establishes a confirmed direction, only then will I be comfortable actually presenting the low and mid M caps to your attention. Okay, I'm gonna be waiting for that phase just to be a bit more responsible with it because I understand that not everybody has a risk management system, and I do not want anyone to get chopped up. Alrighty, the volatility can kill if you are not. If you're not prepared for it, okay? And if you're going to be too stubborn on just one direction of the trade and then price goes into the other direction and you don't have any invalidations in play. Now, as far as FTM is concerned, FTM has a reasonable volatility profile, which I like, and I do believe that it is easy to manage, and that's why I will be talking about FTM today. In addition to that, I already have an existing position, which I took right here. Right, that's when I last brought up FTM to your attention. Price did rally. I did take some off the table right here, not all. Now we've dumped back down and I have built on that position that I caught right here. So yes, I'm sitting in the red on the rest of that position, but I've decided to add to that position instead of, getting scared out of it. And I'll tell you what it is that I'm seeing and why I particularly like FTM's chart. Now I noticed FTM would be a very, very easy trade to manage at around 42 cents. Okay, I'm looking at this orange line right here. And that is primarily because it lines up with number 1, the 2-day time frame. Number 2, the 3-day dynamic. Okay, number 4, it's very close to the 4-day dynamic. But in addition to this, if I looked at the monthly time frame, okay, just fix my scale right there. This was also a critical monthly region right here at around 42 cents. Price used it as resistance, took it out as support very, very slightly, and then rallied to the top of the range very swiftly right there. We lost it right here. This was on May 1st, 2022. And we made our way all the way back down to the bottom of the range at around 18 cents. Now, this is the first time since May 2022 that we actually managed to take it out. And the way I am looking at this current candle of Feb, I'm looking at this as a resistance back then turned into support. Prices come down to give it an official test. Now, in addition to this being a critical region of support, what I'm really liking over here is the price action. Okay, if I'm being completely honest, I'm looking at this, I'm like, okay, this appears to be a double bottom and the bulls are really, really fighting here. And a good testament to the bulls putting up a fight along this entire region, right, which is this right here, this entire region, is this. If I take you guys on over to the Mango dashboard and I filter out FTM from this list, And I'm currently on the 4-hour time frame. Now, if I look at the trend on FTM USDT, it was previously short. Okay, it just turned neutral 12 hours ago. Alrighty, so now you're seeing that, okay, the bulls are turning this trend. They're looking to actually bid FTM on this particular zone. We had a short signal turn neutral. If I take you on over to the daily time frame, we have a short trend signal right here as well, which came in a day ago. However, notice the returns though, minus 5%. Okay, so there is no follow through from the bears right here. The bulls are winning this fight on the daily time frame as well. Okay, so this is a very, very interesting trend and volatility profile right here on the dashboard telling me, okay, the bulls are looking to show strength here, and that's essentially what we're seeing, right? This appears to be a very minor double bottom like formation, which can best be viewed on the 4-hour time frame. However, now while we do have a nice beautiful bullish consolidation right here, we need to understand that the neckline of this bullish consolidation has yet to be taken out. The neckline comes in at around 48 cents. However, if price actually starts closing 2 consecutive 4 hours over 48 cents, I'm saying that this pattern has now triggered to the upside. Okay, now what is the measured move of the W-like formation? The measured move will take, okay, I already have the measured move plotted on my chart, but the measured move will take us up to 55 cents. From where price is at, or rather from the neckline all the way up to 55 cents, that's going to be a good 15.9%. But at that point, if we see additional strength here, like something like a bull flag consolidation, I will be expecting continuation from FTM, essentially continuing its intermediate uptrend, because right now what we can see on the weekly time frame is that FTM is trying to establish an intermediate uptrend, right? So essentially what this would have been then is just a minor pullback in the middle of an intermediate uptrend. But yeah, this is anyways all I have for you for Bitcoin as well as FTM. Eyes on today's CPI reading, because that is going to set the tone for what is to come next. If Bitcoin dumps here, I'm saying the altcoins also take a leg back, at which point I'll be looking for FTM to also break 42 cents. We could then expect lower across the board, not just in terms of crypto assets, but also traditional as well. Now, I hope you guys enjoyed this one. If you did, make sure to smash that like button, and I will see you in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.